Microsoft, is it about to have a 15% drop? Let's just do the analysis on this, which I just did for someone. Now, for a while now, week in, week out, as you know, it's one of my quality 5, but very rarely it tends to do what's called a daddy bear. What's a daddy bear? It's when the short and medium stock prices on the monthly MACD, they drop, okay? And the reason you sort of want to get out during those times is because in this case, it dropped 26%. And of course, if you saved your capital from that drop and were able to then resume when this started rising again, you got a, sorry, it dropped 28%, you got a 26% gain on the way back, right? Whereas you got 0% if you just bought and hold. So the problem with buy and hold, you got 0%. The benefit of just using that simple rule and that simple entry is you got a 26% return instead. Massive difference, okay? 0 versus 26. Now, that's why it's in the quality 5, because it follows that pattern, as do the other stocks within that. Separately to that, it looks like it's about to do it again. Now, that means it's one of those infrequent times when I've got to get out. So what might happen, and it's not happened yet, and I'll do it in my weekly update. Okay, so it's not happened yet, so don't panic yet, because I'll go into it in a bit more detail. But one of the things, that's where I'm just sending my team a note on something else, is that this is what's known as a head and shoulders pattern. Okay, the banks that, you know, whether it's Goldman Sachs or anybody else, will have a whole bunch of technical analysts who will be writing notes on this. And what it means is that's called a shoulder, S, that's called a head. It's in my books. If you want to look at the books, alpeshpatel.com/links, and that's another head. All right. When Paresh, who works with me, did the trading strategies for a major hedge fund, a multi-billion-dollar hedge fund, as one of the original people behind it, these were kind of some of the strategies they'd put together. Now, the idea is if the price falls below the neckline, which is that, the neck, yeah, think of it, head, shoulders, neck, then it will drop the same distance below from the top of the head to the neck, so it would drop to here, which would mean from current levels, it's going to have a 15% drop. Now, if that then, and it becomes a support, which it has in the past been, because a resistance there, a resistance there, resistances become supports traditionally, then that would mean, were we to get in at that point, I'm not saying we're going to trade Microsoft by any means, this is all premature, this is just here for discussion purposes, in my weekly updates I'll update this, then it would mean, were it to then go back from that point up to its all-time highs, which I think we can pretty be assured it will at some point, you'd be locking in a 34% gain. Now that 34% gain, even if it happened over 2 years, I'd be fine if my pension went up 34%. So, should I, the question arises, should I liquidate everything if Microsoft drops below that neckline, and then when it gets to that price point, do I put absolutely everything into 2 times leverage Microsoft and get a 70% return over, say, 2 years? Won't quite work out like that. And 34% if it's unleveraged. It's one way to go. It's one way to go. Anyway, I just thought I'd show that out of interest. We'll keep an eye on it. My weekly updates, my webinars will have it. My broadcast at the weekend will have it. So don't worry, you're not going to miss any more updates on it, but you will get stuff on it, okay? If you're watching this on social media, you will want to like and follow for more and subscribe and all those wonderful things that people do so you can learn stuff, because I will keep on giving you amazing insights into the markets, okay? Thank you all very much.